Consent.
All right.
All right, we'll start in just a moment. Live stream's getting hooked up. All right, here we are. We are live. We're live with Scott Ferguson. We are a little bit early, everyone, about 10 minutes early. Again, if you have any questions, just put them in the chat. We'll do our best to get them answered live. Otherwise, we'll definitely answer for you on the replay. So why don't you give everyone an intro about who you are?
Yeah. Thank you, Rob. So my name is Scott Ferguson. I am with CBRE on the debt and structured finance side. Typical financing that we structure in place are probably going to be that 1 million to 25 million. I'm part of a team. It's me in San Jose, guy in San Diego, gal in Phoenix, and then a guy in Denver. And we cover all property types, including obviously multifamily.
That's fantastic. I think a lot of people have these questions and it's so mysterious about how do I get funding? How do I get approved? And so we just have a bunch of questions. If you're okay, we'll go ahead and get started.
Do it, rapid
Okay,
fire.
let's do it. Let's do it. So first thing is how can people, and we're talking about commercial loans, okay, people, these are commercial loan questions, okay? So how can people get their loan approved fast?
Making sure you get the questions answered and the due diligence items in as soon as they're requested. Obviously, that just keeps you in front of the process as opposed to being behind. And then if you're coming to the finish line with time to spare, it just gives you more options versus coming to the finish line with no time to spare. So I like to keep as many options as possible.
You said time to spare. Wow, we're at the end of the year pretty soon. I'm pretty sure you're gonna run into a lot of rush orders.
Yeah, we see those. And then obviously things to keep in mind with lenders and whatnot is, October, November, December, a little bit different than like the summer months or earlier months just because of the holiday weeks. You've got a lot of their back office staff, underwriters, loan documentation specialists, just out of office. So you factor that in, plus third parties, appraisal and environmental vendors, maybe being down staffed too. It just definitely either stresses the system or causes delays.
Right. So for commercial loans, can you explain the three most common prepayment penalties?
Yeah, usually what you're going to see is yield maintenance, a step down prepay, or even no prepay. Typically, depending upon the lender type, you'll have a certain prepay associated with that lender type. So credit unions typically no prepay, banks definitely step down. Yield maintenance will come into play on, some life company stuff or some securitized products.
Can you explain in the short version, what's yield maintenance?
Yield maintenance is essentially, and you'll see the description in the loan documents, it's pretty complicated, but I'm going to give you like a very oversimplified answer. But you're essentially, when you pay off, you're allowed to pay off the loan, but you're essentially going to, it's like almost like the present value of the future loan payment, tied to a treasury or some type of yield like that. And that's how the lender is going to calculate what that prepay penalty is going to be like. It's not like a simple formula. Otherwise, I'd bang out the math with you here real quick, Rob. But yeah, that's definitely, if you go down that route or go down that financing route, you definitely probably want to plan to be in that property for the life of, or for the term, or life of the term, essentially.
Right, definitely. So what is an interest only loan? Those seems to be more popular now with the higher rates.
Yeah, interest only. Is this going to be payments based on the interest rate versus principal and interest payments based on an amortization schedule? So, it definitely, if you're looking at financing options where you need to, maximize your monthly cash flow, obviously interest only could be one of those means.
Is it harder to qualify for an interest only loan, or I mean, how do you get it? How do you get that feature on your loan?
Yeah, so a couple of different, right? Depending upon what you're talking about, you've got stabilized or permanent financing. Sometimes you can get a small period of interest only. Bridge financing is typically going to be interest only, but it's a smaller term. And then with construction, it's interest only, but they reserve for that in the financing. So you're not necessarily making payments during the construction period, if that makes sense.
Okay.
And then how you would get the interest only is, again, it's going to be deal specific, but essentially you'd have to find like a lender that essentially has that program for that type of property.
Speaking of bridge loans, how do buildings
Yeah,
with high vacancy get financing?
no, good question. So essentially what a lender is going to look at is a couple of things, right? So they're going to look at what current, in place cash flow is, and then what you expect it to be. And when I say you is typically sponsors will create a pro forma that also includes like a breakdown, cost, scope, and timeline of what renovations will be needed to hit those pro forma figures. And usually you want to supply that with some supporting rent comps to show the lender is like, hey, like these are the numbers we think we can get to. This is how we're going to do it, and this is why, because current market rents for this, quality are hitting these figures.
That's
Does that
awesome.
answer that?
Yeah, definitely. I mean, it's obviously we can't cover everything, but it's just like enough information for
Yeah.
people to hopefully get their questions answered and then they can ask follow-up questions. I know I've been getting feedback from people all over the country that ADU laws are getting relaxed in their neck of the woods. And I'm wondering, how do ADU, additional dwelling units, maybe there's spaces in the carport, maybe there's a bigger lot where units can be built or prefabs dropped off. How do those factor in positively or negatively into apartment complex financing?
I wouldn't say necessarily negatively. There is some positive upside. Some lenders, depending upon zoning and all that stuff. I mean, there's other things that factor into leverage and all that. They will include that in their cash flow analysis. Some programs that are more black and white may not. So it kind of just depends upon, again, what your plans for the property is, and then two, okay, once you know what your plans are, okay, looking at those debt options, and then possibly looking at lenders that will include ADU income.
I see. So there's no real hard standard at this point.
Uh, no, I know that's like the politician answer, but yeah, kind of just depends.
Okay. So what are the top 5 myths in your opinion about financing an apartment building?
Um, Top five, I can maybe give you like top one or one that's like brought up with conversations with owners or prospective owners is LTV. We get a lot of questions about what's my max LTV. If you're looking at a stabilized property, your primary constraint, not necessarily LTV, but it's cash flow. So it's how much of a loan can that property support based upon its cash flow versus LTV. And that's going to be the constraint that you usually run into first. So it's not necessarily LTV, it's cash flow. So just understanding the cap rate you're buying at versus the interest rate that you're getting.
Speaking of cap rates, what's the lowest cap rate you've funded so far this year?
I mean, there's
This year.
stuff like this year. I mean, there's stuff that's been like in, a sub 5 level and whatnot, especially if you're talking multifamily and San Jose and whatnot. There were, some sub 4 stuff and things like that. But yeah, it looks like lately cap rates, are starting to come up based upon, the limited activity that's been out there.
Okay. Yeah, definitely less activity, less velocity, less inventory, but higher rates.
Yeah.
So,
Yeah.
I
Good
mean,
combination, right?
yeah, exactly. Investors are trying to navigate this. What kind of loans have you seen investors gravitating towards?
Again, and I hate to repeat myself, but it kind of just depends upon what their strategy for the property is and then what they think interest rates are going to do, right? So we've seen some people like try to lock in like fixed rate terms for as long as possible as like a hedge. We've seen others kind of look to like minimal to no prepayment penalty options as, as another way to hedge it, because you're still getting fixed for maybe 5-7 years. So you're still like hedging against, future interest rate increases. But you're also giving yourself the opportunity, if you think interest rates are coming back down anytime soon, to get out with minimal to no cost, at least on the prepayment penalty side.
So let's say one has a strategy to buy and hold. So what kind of loan should they be, what kind of loan program should they be looking for?
Buy and hold. I mean, you can look at some options with interest only if you're looking to maximize monthly cash flow, maybe in those first couple of years. You could look at, you know, a 10-year fixed type property if you want to reduce, you know, additional or potential future refi costs associated with that. Or if you want to buy and hold, but you think interest rates are coming down, then maybe look at, you know, some minimal to no prepayment penalty options.
So I'm sure you're probably firsthand witness of this. There's so much uncertainty in the market right now that people are on the sidelines. They're wondering what they should do. Should they buy? Should they sell? Should they refi? So, I mean, what are your, we're not going to hold you to this, okay? But what are your predictions for interest rates? Short-term predictions.
I'd say right now, if I had to bet, like, I think we may start to see a pullback just because the velocity, like, has literally just gone up in a straight line for the past like 2.5 months. You know, the 5, 7, and 10 treasuries. How much of that is them catching up to the Fed, and how much of them is kind of front running the Fed's decision over the next meeting or so? So I think maybe short term you may see a pullback, but no.
Okay, that's good. Okay, I'm writing it down. I'm gonna have you sign it there. And send you the DocuSign. Okay, I mean, so when a borrower is going through the application and going through the process, does having the lender take an escrow for taxes and insurance? Does that, why is that required sometimes and why is it not?
Just gonna be lender preference, right? Lender programs, just how they've written their policies and procedures. I mean, obviously, some lenders, it feels like it gives them more control, so they know at least like the taxes are being paid. So, you know, there's no like potential, you know, lien coming, you know, before their lien if they were to go unpaid type of thing. Usually they catch that, but it's could be more of like a belt and suspenders type of approach that we see with a lot of financial institutions. So I think it's just more to like manage risk per se from an active like management standpoint.
Belt and suspenders, man, that's going to be the title of the video. I love it. So tell me, what's the hardest deal you ever had to finance that you closed and why?
There's been some hard ones, like obviously the ones with environmental issues. Those are always tougher. You maybe don't see those as much on multifamily, but on commercial properties, you may run into that. Those ones are always like, can be a challenge if something pops up that you're not expecting it. I'd say that like in general, like those are probably the tougher deals. Like you do as much analysis up front, like, you know, you have those conversations with your borrowers, you know, background, all that stuff. You do all that stuff up front, but it's like if a third party report comes like in sideways or something pops up on it, and you know, how do you plan for that per se? So at that point, you know, it's a lot of reacting, a lot of relying on the experience, and then just trying to find that solution and still get it done.
Interesting. Did you have to switch lenders to get it done with the environmental concern?
I mean, sometimes that's a potential possibility, especially if you're dealing with a purchase, right? And that can start to like blow things up a little bit. So yeah, that's always a route that's like an option. Try not to go that route, but you know, on those more time-sensitive transactions, that can definitely happen.
Interesting. Yeah, I remember brokering gas stations and the financing was always a huge problem, especially with the,
Yeah,
you know, unavoidable contamination in the ground. So,
yeah, right. So
so tell me, what's the,
that's
on
what
the
gets
other
done.
side? Yeah, what's the easiest deal you ever financed and what made it easy?
Easy ones are just like, you know, the borrowers, you know, are responsive, you know, somewhat tech savvy, you know, email and text, you know, just so the communication is, you know, constant and daily, and you're constantly progressing towards that finish line each day. Yeah, it's just like being organized, and then just having those conversations, you know, addressing all the questions up front, things like that. So nothing like rocket science or anything like that, but those tend to be the easier ones. But every deal kind of has its challenge. But at least like if you're doing as much upfront as possible, makes it a little bit easier
Okay.
when those challenges do come up.
Wow, you're so experienced. You look so young, but I'm gonna ask you, how long have you worked with your oldest client? I mean, longest period of time.
Yeah, I've had some that I've touched base with since I like started doing it. So I've been doing like at least on the commercial lending side and some like roll or whatnot for probably over 10 years now. So I've had some that probably definitely longer than 5, 7 years.
Okay. And how many loans would you say you do with the average client per year?
Oh, it just depends, right? It depends upon what type of client. Maybe they only have like 1 or 2 properties, so maybe you only do like 1 or 2 deals with them over, you know, a lifetime. Then you have people that are just more active, you know, in and out of things. So it varies. I know that's a politician's answer, but again, I hate to say this again and again, but it just depends on their strategy, right? If they're looking to be more active, if they're looking to leverage, you know, and grow the portfolio, or are they looking to keep things status quo and just looking to minimize costs and to, you know, minimize interest expense. So again, it just depends on that person's strategy, and then we kind of go down that path that lines up with that strategy.
So if someone's watching this video and say, "Hey, I want to be Scott," what's the easiest path to get there?
I'd just swing, you know, just take your opportunities, things like that.
I mean, is there what is the entry level job in your field that they can kind of climb the ladder up?
Well, before I went to the debt brokerage side, I started like in the banking side. So one could start there, and I've seen people start through the brokerage side and just go through those ranks. So it just depends, right? Everyone's path is different, I guess, but it takes a lot of hard work, right? And I'm sure Rob, you can attest to that. You're on the brokerage side, a lot of hours. It's just a lot of, reaching at, any opportunity that, arises that makes sense. So it's just that constant, I guess you can say, daily hustle that we do.
That's something everyone should keep in mind. He said daily hustle, hard work, and smart work, and he's so
And
consistent. I mean,
there's some luck
consistent.
too. There's some luck involved too. So
Well, good luck comes with a good plan, I'd say.
yeah, that's fair. That's fair.
So how can people get a hold of you? Please tell us your contact info, your website. How do people find you?
Best way, and Rob, you have my contact info, so if you want, you could share it with the group. You have my number and my email, but that would be the best way to get a hold of me.
Okay. If you want to just say your phone number, if you're comfortable.
Oh yeah, yeah. It's 408-705-6623.
Wonderful. I think, yeah, we had several people watching the feed, and we're going to get even more on YouTube. So any follow-up questions, we'll be sure to circle back with you. Scott's been so generous with his time. Be sure to thank him in the comments. And if you have any loan questions or loan needs for financing commercial property, be sure to contact Scott. We'll put all his contact info in the comments. Thanks, everyone.
Cool. Thank you, Rob. Appreciate it.